Well, the quarter one FY23 GDP data is slated to be released today, and here's what you can really expect. There are several indicators that suggest that India's economy is making resilient progress despite the drag from the global economies and also the elevated inflation. We also are seeing slackening of the external demand because of the geopolitical developments, which is taking a toll on the world trade. But Indian economy continues to recover from the effects of the COVID-19 pandemic. In fact, it's estimated to have grown in double digits in this April to June quarter of financial year 2023. Now, the GDP growth rate is expected to be in the range of 13% to 16.2% for quarter one, as per various rating agencies. Remember, this growth will be in comparison to the 20% growth seen in quarter one of financial year 2022, that is the same quarter a year ago, and 4% growth on a sequential basis, which was seen in Q4 of FY22. Now, so why are we seeing such a high number? Why is 13 to 16% kind of GDP numbers you can see? Well, that is because of the steep fall in the Q1 of FY21 GDP data that we had seen. Remember the COVID year, because of the lockdown, when the nation was locked down completely, there was hardly any growth. In fact, it was the economy shrank sharply in quarter one of FY21 as well. So the economy has been slowly and gradually recovering from that steep fall. And this time around, experts see that especially services may contribute maximum to the GDP data this time around. Services, which has helped grow this time, is because of the revenge spending that we have seen. Revenge spending on services like hotels, hospitality, travel, education. Also, urban wage growth has been steady going in this quarter as well. Also, manufacturing is expected to support the GDP growth this time around, which was seeing high export demand and the internal domestic demand as well. The credit growth has also improved from the financial services business. People are taking more loans to get their businesses on track. So there is high demand for the credit as well. All of this contributing to the overall GDP data. Now, what could have not performed this quarter? There is an anticipation that perhaps agri sector may be hit this quarter because of high inflation, and therefore the rural consumption also may have come off. That we will get to know in the final GDP data that will be out today at 5:30 p.m. But this is the expectation. The anticipated double-digit GDP expansion in Q1 FY23 definitely benefits from the low base of the second wave of COVID-19 that was seen in Q1 of FY22, as well as the robust recovery in the contact-intensive sectors. All of those sectors which have started to work in a full-fledged fashion now. Also, the vaccine coverage, which has covered almost the whole of India now. The key drivers could also be investment growth led recovery as well. The sharp increase in the GST e-way bills that has contributed to the growth as well. Also, the trade, hotels, transport, communication, that growth, the high corporate travel, the lower infections in COVID-19, all of those may be the driving factors for this quarter's GDP growth. What perhaps could have been a drag? Russia-Ukraine war, impact of that, high commodity prices, which may have dampened consumption for a bit, the severe heat wave that has hit the wheat output, the farm growth as well, that may hit the agricultural growth and the farm growth this time around. The slowing exports because of the hit on demand, external demand as well due to the war, that could have been a reason. The rising interest rates and high inflation could have been big drags in this quarterly GDP growth as well. What is next going forward from here? So this is as far as what we expect. Going forward from here, there will be a keen eye on will growth sustainably be steady and on the improving trajectory going forward from here, despite the multiple risks globally that we are seeing as well. There is demand destruction, for example, in India's key trading partners, US, EU, China. There's uncertain global environment, there's geopolitical situation, there's slowdown in the global growth, especially in US and Europe as well, and monetary tightening and inflation, even going forward from here. So these are the unknowns and the uncertainties that the markets will have to continue to watch out for. But overall, this quarter, about 13 to 16% of growth is what we really expect.
If you like the video, do like, comment, share and subscribe.